What is cash management services industry?
We are a market leader in the retail cash management segment. Moved 1.7 trillion of cash.
We have acquired a Fintech firm. For the future, we should be able to handle any digital solutions that are required and cash also, parallelly as a hybrid platform.
What stops us from moving jewelry and bullion?
Our PAT growth was roughly around 32-33% CAGR for this 10-year period.
I reckon there is much more to this than meets the eye. Thank you for finding the time today for this chat. The point of today's chat is to explain to our viewers what is cash management services industry as a whole. Generally, when a common Joe sees a cash van on the street, we think that it's majorly doing the job of taking money from the bank and putting it in ATMs, and that's where it ends. But I reckon there is much more to this than meets the eye. So the idea is that we'll run through in a very simple language how does cash flow in the country, what is the role of cash management services much more beyond ATMs as well. Maybe then we'll take a dive into where Radiant fits in the scope of cash management services. So let's introduce everyone first. We have Colonel David, who's the founder and CMD of Radiant Cash Management Services. He's been a ex-military person for 25 years and then started Radiant with the background of security at heart. So, now the custodian of wealth of public in the cash management industry. Mr. Alex, who is the Chief Operating Manager. He's been associated since 2012 with the company. And Mr. Muthuraman, who is the Head of Strategy. And I think let's start with, Colonel giving a brief of how this company was started. And what is the flow of currency in the country? How does cash management services come into that?
The currency in circulation, that is essentially what is being managed by the cash logistics companies. And the currency in circulation today, as on date, is 34 lakh crores, which is being moved around. Now, from the mint where the currency is printed, just to study the currency cycle, it comes to the walls of the currency chest of the Reserve Bank. From there, it's moved to the forward banks. And from the forward banks, let's say from the currency chest of those banks, it moves to the banks which are deployed in the retail banking system that we see, the smaller branches which are there. Now, from the branches, the money then comes to the body public. It comes in two forms. The larger form is in the form of the money being taken over the counter from the teller of the bank. Another way in which it comes to the body public is through the ATMs. So ATMs is another manner in which the money gets disbursed to the body public. And once it goes in the hands of the body public, it gets spent in different outlets. It can be for buying fuel, it can be in a retail outlet, it can be buying jewelry, it can be anything. I mean, any aspect, you look at anything, a milk vendor, everywhere there is a requirement of cash being paid out. So then from there, the cash is then picked up from these outlets and it again gets back into the bank. And this is called the reverse cash cycle. In this, for bulk movement of cash, it's called cash in transit. So some companies or the cash logistics spectrum, they focus on this segment. Some focus more on the ATM loading part of it and the management of ATMs. And some of us, like we are a company who's focused purely on retail cash management. That is, you take any retail chain or you take a set of petrol bunks, the cash from there is then picked up and brought back to the banks. It can be sorted out, bundled up and brought to the banks and deposited in the banks. This by itself is a very large requirement in the country. It's a great need in the country.
If I was to, make it very simple for everyone to be able to realize how it flows is that there are 2-3 places where cash management companies come in. One is when the cash has to flow from the banks to the ATMs. So there will be a armored van that picks up the money from the banks, puts it in the ATMs. That is one part of the business which a couple of companies in the cash management services industry do. Then the second part, as you explained, is the reverse cash logistics, where say that cash is then spent at different outlets by people for refueling their cars or buying jewelry, etc. Now the cash collected in the stores has to somehow flow back to the banks, and that's that another part that comes in where cash management services play a role. So is there anything else besides this that cash management services industry does beyond these two aspects?
The third aspect is bulk movement of cash. It can be movement of bulk cash from the mint to RBI vaults, from RBI vaults to bank vaults to bank branches, from one branch to the other, etc. For this, banks hire vans. So these are called dedicated cash vans. They hire these vans along with the crew, a 5-member crew, a driver, 2 gunmen and 2 custodian, with CCTV cameras in driver cabin, cash cabin, tubeless tires, armored vans, with geofencing, geo-tracking, with all of those features. Banks hire these vans for bulk movement of cash. So that's a large segment of the cash logistics, probably almost as big as the retail cash management itself.
But when it comes to retail cash management, how does the structure work? Someone like Hindustan Petroleum, or there'll be an unrelated entity which is a jeweler. So how do you connect dots, say Radiant Cash Management or CMS Infosystems or SIS? There are about 5-6 companies, if I'm not wrong, in the cash management services business. If any of them had to engage into retail cash management services, does someone like Hindustan Petroleum reach out to them, or does the bank of that outlet reach out to the cash manager? Who's the actual customer to a cash management services business? Is it Hindustan Petroleum, or is it, let's say, Deutsche Bank, who is the banker of Hindustan Petroleum?
So looking at your same example of Hindustan will, let's say, bank with Axis Bank, and we will be the service provider for Axis Bank. So 95% of our business all comes through the banks.
We sign long-term contracts with banks, and banks in turn offer doorstep banking as a value-added service to its customers. So in an example like you said, Hindustan Petroleum could be banking with Axis Bank. Axis Bank offers doorstep banking as a value-added service to Hindustan Petroleum, and once Hindustan Petroleum signs a mandate, Axis in turn outsources it to us. So we go there as a representative of Axis Bank, collect the cash and bring it to the nearest Axis Bank branch and deposit.
So 3 aspects to the cash management business. One is put the money in ATM. Second is take the money back from the outlets, put it back in the banks. And the third aspect is bulk movement, which is in between the banks and from RBI vaults to the banks.
Absolutely.
So in all of these 3 aspects, the core customer to a cash management services is a bank in most cases, that you should have some sort of contract with the bank, who is in turn leading you to the end customer. Is that correct understanding?
That is correct as of date, but this industry is maturing. In retail cash management, many banks do not offer this as a service to their end customers. It's only offered as a value-added service. For example, public sector banks except SBI do not offer this as a service at all, as a doorstep banking. They expect the customer to walk into the bank branch to deposit the cash.
67% of the banking is done with the public sector banks. So that's by itself a huge opportunity, because all those clients and customers, the service is not being offered at all. So therefore, here in such cases, for these clients, we can look at direct relationships with them.
Essentially, our revenues come from 5 different parts, the basic core business revenues. So first is cash pickup and delivery. So on behalf of banks, we go to an outlet, pick up that cash and deposit in that bank, and we charge the bank a fixed amount per point per month. So this is cash pickup. The reverse also, we can deliver the cash and then charge the bank for the delivery. So this is the core cash pickup and delivery. This roughly accounts for about 65% of our revenues. The second is network cash management. Imagine in tier 3 locations, we are picking up cash on behalf of a bank, but that particular bank may not have a branch in that location. So in such instances, we deposit that cash in our own accounts We have over 1,000 collection accounts across the country. Deposit in our own account and then electronically transfer it to the concerned bank the next day. So this is an additional value-added service that for which we charge the bank. So that is network cash management. Roughly about 17-18% of our revenue comes from network cash management. The third is called cash processing. Cash processing is for every outlet. We give a choice of either give us a sealed bag or open cash, which we count and verify. So if it is open bag, we count and verify, for which we charge a cash counting and verification charges. Other processing involve sorting, removing of soiled notes, ATM ready bundles, etc., for which we charge for the cash processing. So this segment roughly accounts for about 5% of our revenues. The fourth is the cash van operations or dedicated cash vans, cash in transit, ad hoc request for vans, etc. So that segment today has grown fast, as in probably about 7-8% of our revenues. The last fifth segment is other value-added services. We provide something called as a man behind counter. So where we send a trained staff to actually handle cash from body public and keep it ready before accounting for our cash pickup charges. Man behind counter, we provide vaulting as a service. So where the banks surplus cash can be stored overnight, charged based on the quantum of money stored and duration of storage. So those all come under the other value-added services. So these are the 5 segments that account for our overall revenues.
Now, if you have to put it in perspective, the size of this opportunity, so there are 3 things, and I would believe that ATMs being something where the banks are deciding the endpoints, it could have some realizable size. But in terms of retail, how do we assess what is the size of the industry and what are we currently serving as an entire industry, and what is the potential for cash management services in the country like India, where digital payments is taking a lead, for the last couple of years?
There are 2 ways to approach this. One is in terms of volume of cash that is being handled by retail cash management companies, or the extent of coverage. I'll cover both aspects. Retail cash management is a relatively nascent industry in India. It's probably about 20 years old, 22 years old. It's been around for much longer in other developed markets. The currency in circulation is about 34 lakh crores. Velocity of money is roughly around 5.5 times. That's about 175 lakh crores of cash transactions happen in a year. And we handled about 1.7 lakh crores last year. The entire industry handled less than 4 lakh crores. So that's just about 2.5% of the total.
Okay, so we form about 35-40% of the retail cash management business.
We are a market leader in the retail cash management segment, both in terms of points covered as well as volume of cash handled. And so we handled about 1.7 lakh crores, and the entire industry handled less than 4 lakh crores out of 175 lakh crores. So that indicates the potential for the future growth. If you look at it the other way, India is a land of shoppers. We have 2 crore retail outlets of various formats. Okay. Not all of them may be using retail cash management, but in our own estimate, about 25% of them will be eligible to use a service of this nature. That's about 50 lakh outlets. We are at about 75,000 outlets. The entire industry will be less than 2 lakh outlets. So that again gives a 4%, little less than 4% penetration. It's a long way to go for this industry to reach saturation penetration levels. To put things in context, in developed markets, roughly about 85% of organized retail outlets use some form of cash management service, whereas that number is far less in India.
So today, when I go out on the street, living in the city of Bombay, it's generally, UPI dominates all small ticket payments. Probably that wasn't a reality for most developed countries, maybe, where it happened. When we see cash management services from the next 5-year point of view, how do you think that this would pan out, and does, a tier 1 like Bombay versus the rest of India paint a very different picture in terms of digitization of payments? What is your perspective on that?
That's a good question actually, Karan. Typically as a company, we've always focused on the bottom of the pyramid. Even today, approximately 67% of our revenue comes from Tier 3, Tier 4 locations. So, very often, those of us who are from suburban areas, we are colored by what we see anecdotally as to what we experience around us. Like you mentioned, a typical city, a developed city like Mumbai, is always at the cutting edge of any new technological progress which is there. But the fact that year on year we are growing the volume of cash that we are moving on a daily basis, we are moving 500 crores of cash. So there is a substantial amount of cash movement also parallelly happening. We are also not blind to the fact that digitization is happening, and to arrest that as part of our strategies, we have acquired a Fintech firm which is headquartered in Kochi, and now they've been with us for the last about 8 months. So our belief is that for the future, we should be able to handle any digital solutions which are required and cash also parallelly, as a hybrid platform. But let me tell you, cash, there could be some reduction, but there would be the fact that the government is still continuing to maintain such a large volume of cash in circulation. Cash is still very relevant and definitely relevant for the next 5 years and or even beyond. We see that, even today a developed economy like the US today has reached about 72% digital and 28% cash. And the cash logistics companies in that country are all billion-dollar businesses.
And can you talk a little about, you mentioned that you've been taking initiatives to also couple digital aspect of payments with cash management.
Yeah, thank you, Karan. Karan, one thing I'd like to tell everyone is we have a very major network, over 14,000 pin codes, and the major commodity we're moving is cash. Today, with such a strong network and platform, we can onboard a lot of things onto it. So some of the strong initiatives which we want to onboard is, first thing, as CMD had mentioned, we have acquired a Fintech company. So a lot of Fintech solutions can be onboarded onto this, because a lot of Fintech companies, they need a strong network to distribute their products like micro ATMs, Aadhaar-enabled payment solutions. So with our kind of network, it makes sense for them. And we also see a lot of synergies with them, which I'll cover in one of our other initiatives. The second thing is, today we're moving cash. What stops us from moving jewelry and bullion? We have the same infrastructure, the same requirements are needed for even moving that commodity as well. So we've got into jewelry and bullion, which we started December last year, and that business is also growing slowly and steadily. The third initiative which we want to talk about is, as CMD had mentioned and Mr. Muthuraman had also emphasized, that a lot of the business today is in the public banking sector, and they're always slow to catch up. They're not pushing this product so much. So as we have gone public, we have a 20-year reputation. We can approach these customers directly. So direct clients is a very, very important foray for us. And we are able to see a lot of growth over there. Like, just to give you an example, last year we were at 2% to revenue contribution. Today we're at 9%. The fourth important initiative is, as we spoke about in the earlier, there are three aspects in cash industry. One is the ATMs, one is the reverse cash cycle, that is the retail cash management, and third is the bulk movement of cash van operations. We raised capital to acquire 220 vehicles. So we see a lot of growth in that sector as well, and slowly we're becoming a strong player even in the cash van operations and bulk movement of cash. The last initiative which I would like to talk about is, as CMD mentioned, is the bottom of the pyramid. There are totally 2 crore outlets out there who are using some sort of cash or in some format or whatsoever. What was the reason we acquired also the Fintech company is, we want to give a product where if you have a low volume of cash, as we come and pick up the cash, we can immediately credit your accounts. So I'll give you guys an example. Like, let's say today there is a outlet. He has a person who we paying a minimum wage of, let's say, 8,000 to 10,000. Every day he has to go and deposit the cash. Today, at a mere amount of, let's say, 2,000 to 2,500, that's how much our rates start off with based on our volume of collection. I'm coming 26 times, I'm visiting your shop, I'm picking up your cash, and as I'm picking up your cash, you're getting it funded. Your complete headache is gone away. You don't have to leave your shop, you don't have to depend on anybody else to manage your cash. As soon as I pick up your cash, whatever happens, that money will reach your account. So this is a new product, we call it Radiant Insta Credit, which now it's in a nascent stage. We've just developed it and we are seeing it in the market and we're seeing a lot of success over there. So this was one of the also major reasons why we acquired a fintech company, and this we see a lot of growth over there. So these are the 5 initiatives.
The way I see it is that retail cash management business, when we speak of, is a very widespread business. So it entails a car moving on the road and picking up cash and putting it somewhere. So it sounds like a very, not a difficult to do business, but there are very few players and it's oligopolistic market. What is the strong reason behind not too many players trying to approach this market? Could you give us some examples of when, how do you secure these vans? Are there any incidences of stealing? What happens in case cash gets lost? Is there some insurance to cover it? What is the risk aspect of it? And what is the reason why not a lot of players try to enter this industry?
It is a risky business. You're moving public money and there's 100% accountability and it's a zero error business. So when an outlet hands over the money to us, then it is assumed that the money will definitely go into their account through the bank. And we are accountable for that. So to carry this out, you need to have a very strong risk management system. So in our case, we have a national level network, which is led by a retired Director General of Police. And there are retired ex-army officers as well as ex-police officers who form a part of this network. The current strength is about 130 of them. So in any part, suppose a cash loss may happen, or if even there is a robbery, within 2 to 3 hours, our risk manager is present at the site. So that's the way we have laid it out. Secondly, the police staff that we have, they don't wait for an incident. They're always in close touch with the SPs of each of the districts. They call on them beforehand, they are in touch with them, and the SPs are aware that we are carrying out cash logistics in their own domain. So when there is an incident of any kind, the response from the police is always immediate and very positive. Besides that, I like to say each and every rupee that is transited or moved is covered by insurances which are underwritten by the London markets. So within a maximum of 90 days, the money is given back to us. And the fact that the premiums of our insurance premiums are coming down year on year is an indicator that our risk management practices are so good that these insurance companies are making a good return on investment on the premiums that we are paying.
Generally, what sort of incidences do we see in cash transit? How much cash do we end up losing? And does the end customer immediately get that loss paid back? Does it provide a lot of security from the point of view of a customer if they approach Radiant to do something of this sort?
Yeah.
Or say they approach some other company? Do we have any strengths there, being we have a lot of policemen and army men working? Does it so happen that compared to other companies, such incidences are less with Radiant, or it is the same across industry?
But why don't you tell them about the volume of cash we moved last year and how did it?
We moved 1.7 trillion of cash, and our total gross cash loss before the insurance claims
is 1.7 lakh crores.
Mm-hmm. Yeah, 1.7 lakh crores of cash, and the total gross cash loss was about 2.5-3 crores. Okay, that is before the insurance paid. The actual hit on our P&L is about 1.5 crores. Okay, so it is 0.0006% for the first quarter cash loss as a percentage of cash move, and our cash losses are the lowest in the industry by a wide margin. That's because of the ex-servicemen across the entire hierarchy. So it's run like a quasi-military operations. We move 500 plus crores of cash every day, which could go up to even 1,000, 1,200 crores in a given day if it is a Monday after a long weekend.
Point I want to bring out here, how we differentiate is the quality of our human resource. Out of the overall strength of over 10,000 people are there in the company or who are working, carrying out the service here, 3,000 plus are ex-servicemen, and the entire leadership is ex-service. So the fact that we are carrying out movement of public money, we carry it out with a great sense of pride, with a great sense of duty, that this is a great responsibility which has been given to us. And that is one of the major reasons as to why we have such a low incidence of cash loss.
Majority of the cases, banking sector is our end customer. So what sort of pricing power do we have with them, and how does the pricing work in this sector intercompany? What is the competence we have in pricing our service versus some other company approaching the same bank?
See, we enter into long-term contracts with banks for them outsourcing this activity to us. So it is not specific to any point, it is not specific to any customer, it is not specific to any volume. So we have a long-term pricing matrix we sign up with banks, which depends on a per point fixed payment based on what is the daily limit for that point. It could start as low as 50,000 rupees per day to as high as 50 lakhs per day. So the pricing matrix is designed, and we have three categories: within city limits, beyond city limits, or far off locations.
So you will tell a bank a price quote and commit X number of points within that price quote?
There is no commitment of any points, any number of points. This is a generic pricing and long-term pricing. Bank in turn offers this service by adding their margin to its customers.
So you will entail picking up from some number of points, right? I mean, if you quote some price, you would have some limits to what you would...
See, the operating leverage works here because we are able to pick up from points of different banks in the same route. First point could be of ICICI, second point could be of Deutsche, third bank could be of Standard Chartered, fourth point could be of Axis Bank. Each bank couldn't care less where else I am going, right? So they are interested in lowest price for their particular point. Like Alex mentioned earlier, to visit a point 26 times a month, our charges could start as low as 2,000 rupees a month. That is less than 70-80 rupees per visit, which won't even cover the fuel cost if they themselves are going to do it. So we are able to offer that kind of a low pricing because we are able to sweat our assets across multiple banks in that same route. Correct. So to that extent, as in we enter into long-term pricing, and it takes some time to build minimum points in each route across different banks, after which operating leverage kicks in and we make this thing. So it also acts as an entry barrier for a new player because it will take that much time to establish profitability in each route before they can start reporting.
So also I could imagine that in case of an ATM or in case of bulk transit, the customer, which is the bank or RBI vaults, have clear visibility in terms of what is the distance traveled, and the cost matrix would be much clearer. But in something like retail cash management, it is so that each of your customers, say each of your banks, are not able to clearly identify the cost matrix as you are probably serving multiple customers of multiple banks in the same location. Is it a correct understanding?
Yeah, the pricing is much more opaque, but it is far cheaper. As in, for individual bank to service that many number of points, they would be ending up spending much more than what we are able to do because we are able to use these assets across multiple banks.
At the same time, we could also get reasonable pricing because we are sweating the assets, so margins could be reasonable, and the customers would not know the cost matrix very transparently.
That's right. And from a retail outlet perspective, this makes eminent economic sense. For example, as in we handled 1.7 lakh crores and our revenues were roughly a little shade less than 400 crores. So that translates to roughly about 23 basis points per for movement. But the same outlet, retail outlet, if it is using a credit card, for instance, they will be paying 200 basis points. 200 basis points is 23 basis points. So it makes eminent economic sense for a retail outlet to use a service of this nature. They can outsource it with the full security of insurance and armed guards and secured vans, armored vans, all of that. If they have to do it themselves, for instance, if at all there is a cash loss, for instance, and they are not insured, the fee that they pay will be equivalent to As in one day if they lose, that is be equivalent to 4 years fee that they pay to us.
I like to say that, as we had derived earlier also during the conversation, it's an oligopoly business. So essentially, it's almost like a duopoly that we have, duopoly, or maybe at best about 3 players who are there. So the pricing has now arrived at a certain level, which any further reduction in that will not be logical at all. And because of that, we are able to now, and we have operating leverage, so we can, these routes have been established. So in terms of competitive pressure to come from somebody new coming into the system will be extremely difficult. And this is common across all countries. You will find that normally cash logistics systems, settle into a duopoly, or at best about 3 players who are working in the market.
So if I was to, visualize how, let's say, retail cash management, what is Radiant's core competence and, largest market share. If I try to visualize how it would function, is that there'll be a van going through a route, picking up cash and depositing in the bank. So is it a fair estimate that, if we add customers on the same route, we don't have to spend a penny out of pocket? Or are there some variable costs in terms of manpower or additional services that we give? Or does it have a very big operating leverage in terms of if we have more dense customers on the same route, we tend to gain a lot?
Yes, the operating leverage is fairly high in this business, and a typical van can carry up to 5 crores by regulation. So imagine that we have 800 vans. So that means 4,000 crores of cash we can carry every day. And today we do 500 crores. So van capacity is not a constraint. Definitely adding more points in the same route adds significantly to the profitability. But then there is time constraint. We operate within 10 a.m. to 3 p.m. typically banking hours. So there's a limit to which that we can add points within a route, after which there will be a step fixed cost that will go up. But having said that, the operating leverage is fairly high. As we can see from our historical performance, the EBITDA growth has been much faster than our revenue growth. And we expect that to continue in future as well.
There is an initiative Alex was mentioning about in terms of instantly crediting the customer's account when you are collecting cash, or I believe we also do have some jewelry, business that we have undertaken. So these two aspects, how do they fit into the current operations? Are we able to leverage our current network, or do we have to do anything new in order to achieve this? Are there any costs involved which can dent the profitability?
No, we don't see any major costs involved, because just to give you a sense, today, let's say our cash executive who is doing our core business, he goes in the morning, let's say around 9 o'clock, and he has to deposit the cash by, let's say, 1 o'clock. So he has most of the day available. And we providing like some minor incentives to him. Let's say for our Fintech division, if he's able to onboard a merchant, when I say onboard a merchant, he's able to give all the Fintech products to him, and the merchant is activated on our Fintech network.
Wait, so can you say what are these Fintech products?
Yeah, so I'll give you an example. Let's say like a micro ATM, or another machine is called a Aadhaar Enabled Payment Solutions, AEPS for short. So let's say in a tier 3 location in Bihar, a farmer comes or a migrant worker comes, he has his daily earnings in cash. He can come, he can give the cash to a Kirana store, and then he gives his account details, and through the Fintech solution, that money, after the Kirana store absorbs it, will electronically transfer to his account. Let's say he wants to withdraw cash. This micro ATM will be like a calculator kind of object. It will be placed on the wall of that same Kirana store. He comes in, he takes his card, he puts it into that micro ATM, puts the PIN. That alert reaches the Kirana store owner that yes, this money has got deducted from that farmer's account, and it reaches his wallet, and then he's able to give the same amount as cash to that farmer or whatsoever.
So what does the Kirana store have to get?
He gets a small percentage out of the total transaction which happens.
So now he acts like a quasi ATM or a bank branch of sorts.
It's a micro ATM.
Micro ATM is called. And we are seeing tremendous growth in this space. Like, just to give you guys an example, the traditional ATMs are growing at less than 1%. The banks are not willing to spend exorbitant amounts on this cassette swapping or upgrading to the new technology. So this micro ATMs are maximum you can get one for 1,800 rupees, and then you put your chip in and they're ready to go. So we're seeing tremendous growth over here. A lot of major players like Airtel Payments Bank or Alipay, they're all already doing this, but they're all very, very dependent on distributors, and they take a lion's share of the revenues. But here, because we're already spread across a dense network, our people are already free to do this. So we see a lot of, and we don't have to have a lot of cost.
What have we done yet in this space? How many micro ATMs have you
So
placed?
today, as on date, we have onboarded close to 10,000 merchants.
10,000
And our target is to onboard about 1 lakh merchants by the end of the year.
And besides this micro ATMs, you were also mentioning AEPS. So can you talk a little bit?
Other enablement system works on fingerprint as well. It doesn't need a debit card. You can just have a fingerprint reader and it will debit his account, and the merchant will give cash from his till to the for withdrawal. So each outlet can do a micro ATM, which is withdrawal of cash, checking of balance, or deposit of cash. They can do AEPS. They can do domestic money transfer, which means one account to other. Domestic money transfer is again a large business. A lot of migrant workers want to send the cash. They get their weekly salaries in cash. They want to send that back home. So they go to an outlet like this, deposit that cash, and it gets credited to their parents or spouse's account back home. So domestic money transfer happens as in a fairly large manner. Utility payments, bill payments of electricity, phone bills, recharges can happen through this. They do sell micro insurance and other financial services products. So each one is like a mini bank. Each business correspondent can act like a mini bank and do all of these services. Right. So our target is to reach 100,000, set up 100,000 mini banks across the country.
And each of them also is available to us as a cash executive at that particular location. Now, how we differentiate is, none of the fintechs have got a network of people on ground. There are no feet on the street. Well, we already have a presence in nearly 15,000 pin codes. So our own risk managers, we can over-ensure the quality of services. Suppose we have a cash executive requirement coming up. Now, as of now, the penetration is so deep that at every pin code, we have approximately 5 BCs, even today, available.
By BCs, you mean business
correspondents. So if we take them on board with all these services, which Alex and Muthu have been mentioning, then they also act as a backup cash executive for us to do the pickup. And that can be, again, we can negotiate with them at a reasonable price.
And how does the physical placement in those Kirana stores work? Is it the cash that Kirana store generates, which is used for withdrawals, etc., or is it so that Radiant, dumps some cash in those micro ATM premises?
You hit the nail on the mark. That's why we see the synergies. Today, there are a lot of Kirana stores, BCs. They need cash. This is a great supply and demand problem which they are facing at the moment. So this was also one of the reasons why we acquired the Fintech. Is today we're already doing cash delivery for the banks. So we can also do cash disbursement for them, and we've already started a little bit of this, like districts in Tirupur and all, where people need a lot of cash on a daily basis, and they're even willing to pay a charge for it. So this can work both ways. We are able to also give them the Fintech products as well as provide them with cash as well, in case if they need for disbursement.
Okay, so how does it work? Say if I am a Kirana store owner and I put an APS and a micro ATM, what can I expect? If I keep cash in my store which is generated for these two services, what sort of volumes do I need in terms of transactions happening through my store for me to make a reasonable amount? And what do you qualify as a reasonable amount where a Kirana store will be interested to do something of this sort?
So it is different from Kirana store to Kirana store. There are some Kirana stores like in Tirupur and all where there's a huge influx of migrant workers, people coming from the temples and all.
So let's
there's
say
about 40 lakhs they're doing almost on a daily basis.
40 lakhs?
Yeah, it goes to those kind of levels as well. Certain Kirana stores. But you can say average about what makes financial sense to them is around anywhere between 2 to 5 lakhs. On a daily basis.
So if there is 2 to 5 lakhs of cash movement through the fintech infrastructure from a given Kirana store, then it would make financial sense for the Kirana store is what
it is quite attractive for them.
So let's say if there is 2 lakh rupees worth of transactions through my Kirana store, how much do I expect to earn out of it?
There will be commission structures for this. So we all work on a per thousand model. We have 1.5 per thousand. It will be anywhere we can earn close to on a daily basis.
1.5 rupees per 1,000 rupees is what you're saying.
It can range for different transactions.
Just,
UPI transactions are
ballpark
zero.
idea, Karan. Now they have the current fintech company has about 7,000 bases already, which they have enrolled and who's doing, carrying their products. So in that, on an average, as per what we have found, the base is in a position to make close to 8 to 12,000 rupees a month out of this service that he is. And that in the hinterland is quite good money, That's what that's the rough number that out of all these services that they're able to earn.
Now let's go to the numbers for Radiant a little bit. That I was seeing that we've grown from a 5 crore profitability in 2018. Correct me if I'm wrong. To a peak of 63 crores in 23, which is around 11 to 12 fold jump in 5-6 years. So what was the major reason for such a strong growth? And thereafter, also in the last year, we have had some 10-15 crores of degrowth on profitability. So could you explain these two aspects of tremendous growth in the 5-6 years, before the last year, and then there is a short degrowth?
The sharp growth in revenues were two things, Arjun. One is a clear reflection of our operating leverage playing out. It takes time to build the network to reach break even, then incremental revenues add significantly to profitability. So if you see the revenue growth, almost a fair share of that incremental revenue would have translated directly to EBITDA. That explains the sharp growth in revenues, profitability between 2018 to 23. In fact, this trend, if you go back even further, from 2013 onwards also, our revenue growth were about 13 to 23. Our revenue growth was roughly about 17-18%. Our EBITDA growth was roughly around 26-27%. Our PAT growth was roughly around 32-33% CAGR over this 10-year period. So 24, what happened? It's a combination of 3 aspects. The first one is we ventured in. It was a period of investment and diversification. We entered the diamond bullion jewelry segment, which is still yet to break even. We are expecting that this year it will break even.
Explain a bit about the diamond bullion jewelry business.
Yeah, just like the way in our platform of network, we are moving cash, we are able to move diamond bullion and jewelry because it's a high value consignments and require the same paraphernalia of armed guards, armored vans, drivers, etc. And that's also a fairly large market. In fact, probably bigger than retail cash management as well in the country as a whole. Because India is the largest consumer of gold in the world. So we have 3 lakh jewelry outlets in the country and 1.3 lakh registered jewelers with hallmarking registration. So it's a fairly large market, and we believe that our services can be offered to these for movement of both bulk movement of bullion as well as forward movement of finished jewelry to the end customers.
Understood.
Our advantage in this compared to the existing players is that we have the densest network of people and the last mile connectivity, which we ourselves can fulfill compared to others who have to outsource that to a third party.
Okay, so diamond and bullion business was the first aspect where we spent some money in the last year.
There was a loss funding that losses were incurred.
Okay.
And we are expecting it to break even in the next quarter or 2. So that affected our profitability to some extent. Alex mentioned at the time of going for an IPO, direct sales was hardly 2% of our revenues. Today it is 9%. So we did build manpower for direct sales. So that takes some time for realizing. So that did affect.
By direct sales, you mean acquiring the end customers?
Offering doorstep banking services directly to the customers, to the retail outlets.
Instead of going through the banks.
Without going through banks.
Okay.
Particularly useful where we are targeting customers of public sector banks who are not even offering this service to their customers.
The banks are not offering this service.
So imagine you are a chain of grocery stores banking with an Andhra Bank or a Canara Bank or a Bank of Baroda or a Bank of India. You don't even have a choice of availing a service of this nature. So there we go and offer this service, and we've been fairly successful, growing it from 2% of our revenue today to 9% of our revenues. So some investment in manpower and team to build that sales organization. We also had one instance of the Ukraine-Russia war affecting significant volume of petroleum. Petroleum sector is one of the important sectors where we cater to, picking up cash from the petroleum outlets. Because of this war and a unique window of opportunity, most domestic refiners diverted their refining capacity for exports rather than leaving the pumps dry. So that reduced the volume of cash in those private sector petrol pumps particularly, which affected our business. We also had, as we had mentioned in our earnings calls, we also had some impact because of degrowth in one particular segment, which is e-commerce logistics, where very low volume cash pickup, we're moving to alternate payment mechanisms. With launch of our Radiant InstaCredit, we are confident of getting that back. So these are the 4 reasons why the peak profitability of 63 crores dropped in 24. Confident we will restore it back very soon.
Okay. So the 12-fold growth for 5 years is explained by the operating leverage, and the degrowth is explained by our efforts to diversify into areas to make leverage the same network that we have of retail cash management by entering diamond bullion jewelry, by accessing customers directly instead of through banks, and some impact on the petroleum and e-commerce logistics business. So all 3 put together, I think, impacted our profitability by 15-20 crores, if I'm
a little less than.
So
12-15.
So how do we expect this going forward? The diamond bullion jewelry business, as you mentioned, probably you are expecting it to break even in a quarter or 2. For the second aspect, which is the direct customer acquisition, is that a cash burn or is it?
No, there is no cash burn. There is incremental expenses. So the marginal profitability for first few quarters will be lesser than what our traditional.
It will still be profitable. There will be no degrowth. I would assume that the Ukraine-Russia war situation is an auto-resolved situation.
Yeah.
And the last aspect which you spoke about, the e-commerce logistics, can you elaborate on what sort of impact will it entail going forward? And can we expect this, that around 60-63 crore profitability which we had in 23, can we recoup that in this year after this 1 year of consolidation?
Yeah, we have not given exact guidance like that, but we are expecting restoration of past profitability of mid-20s EBITDA margins to come in the next few quarters. Like you said, like you correctly pointed out, most of these issues are one-time in nature. Ukraine got resolved. Our petroleum volumes are almost 90% of our pre-Ukraine levels. We expect it to restore it back and continue to grow. E-commerce logistics, we are expecting that Radiant InstaCredit will be able to restore it back. How soon we will be able to restore, we need to see, because it's a product that is recently launched, and direct sales is growing very well. So we expect that should add to the profitability. And incremental profitability from Radiant Valuable Logistics, that is diamond bullion jewelry, should add to our overall profits. Longer term, the worst is behind us, is what we said in our first quarter earnings call. That will hold true.
So now a very, I would say a terminal holistic question, that how do we see Radiant panning out over the next 5 years? I see that there is a lot of activity on the digital side, in terms of micro ATMs and AEPS, coupled with moving from bank-oriented customer set to direct customers, offering services like InstaCredit to balance out between a pure cash play to I would say a phygital sort of a business. What is the internal targets that we have for 5 years? How do we see the company pan out on a business front? What all things do we intend to do? Do we intend to become a phygital company, or do we see strong growth in retail cash? And also, how do we see it in terms of numbers? Where do we expect Radiant to be in 5 years?
Essentially, I want Radiant to be perceived as a platform company. A platform which now, the country has got 19,000 pin codes. We are likely to be present almost everywhere once our business correspondent network on our Fintech acquisition also comes into place. So we'll be a platform on which anything affiliated with cash or cash related products and digital transactions can be mounted and mounted profitably. That's the transformative movement in which we are moving the company currently. And that's why we have taken these very strong steps for consolidation in the last year. So that's been a strong decision that we had to take. We took that decision immediately on going public, and now we are moving that direction. As far as shareholders are concerned, our hope is to grow year on year by at least 15 to 17% year on year is our target, to take that kind of a growth trajectory in the, that I'm talking about a consolidated growth, including our subsidiary. We should be able to achieve something like that.
So by subsidiary, we mean the fintech entity.
The fintech entity.
Okay. Nice to hear that. So I hope all our fintech and digital efforts come to reality soon, and that we are over the consolidation phase in a few quarters. Best wishes for Team Radiant to transition from a cash-only business to a fintech digital business. It was great interacting. And if there is any closing remarks that Colonel you want to give in terms of how do we, as investors, see Radiant from a 5-10 year perspective, if we were to be with you for a long time, can we expect it to have a phenomenal long runway in the nation's currency and fintech story?
Yeah. Essentially, my final word is that this is an ex-service driven company. So we have got great aspects of hard work, of discipline, of integrity, more importantly, frugality, the way we drive the thing, and there's a great sense of accountability and responsibility. Today, we have more than 45,000 shareholders on date. There's a tremendous amount of sense of responsibility we have after we've gone public. And we hope that all the legitimate expectations of the shareholders will be able to meet and exceed in the medium to long term. That is the essence. This company, more than work, it is an emotion. Here we were guarding the nation's borders. From that now, we are providing you safe transportation, safe custody, and secure management of your valuable public money that you are entrusting to us.